Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more bad, I would rather say very bad week, where the overall Wall Street has fallen like anything, or you can probably call it as a pack of cards. Now what we have seen are very important and dramatic changes. First of all, as you can see in front of you, the chart of US inflation rate, and it's a monthly inflation chart. And as you can see here, after a span of 40 years, the inflation chart is showing a huge move, where it has already moved towards 8.6% in the month of May 2022. It is happening after 1980-82. Now, I mean, you may talk about the next couple of moves that will happen as far as the inflation data is concerned, but let me tell you, as far as the stock market is concerned, inflation data will eventually come up after a month, but in those couple of days, or in the next couple of days, we have equity market will keep on running and keep on factoring in all the inflation data which we have, or which we will probably get in the month of June. So it's a lag number, and obviously it will have a definite impact on the market going forward. So with this, what lies ahead as far as the US inflation is concerned, it may go to, it is very near to 10%, the highest we have in the history of US. I mean, as far as this chart is concerned, was 15 and nearly 19 or 20%. So, just consider these two facts, that this is going to move towards 15 and 20% until and unless something exceptional will happen, that we will see going forward. Now let's turn on to this week's market report and what will happen next as far as the upcoming week for the overall Wall Street or the US stock market is concerned. So welcome to another session of USA weekly market report series, where we are going to discuss about the important thing that has happened and the important thing that will impact the market, overall market going forward. So let's check out some of the important news we have here in front of us before talking about charts and data. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, you know, uh, although the big section talks about Dow Jones, but what surprises me is this one. I mean, now ExxonMobil, now you are taking a jab on ExxonMobil. Last week it was Tesla. You are the head of the country, and if you are making such kind of statements like you are bullying somebody, and these kind of school things are not at all worth it. You have all the powers, you have all the necessary instrument to do and correct things, and now you are bullying companies. This is not going well. One must understand that the overall, it's not like any other country, because stock market or the private companies have a very deep hold as far as the US economy is concerned. So if you are started bullying the companies, and they are all big companies, then I don't know what is the way you are going to treat the companies, or what you are thinking about making things right. This is not going to work out at all. Okay, this is not done. This looks like a childish thing. How much money you are going to make, and last week it was about Tesla. So I'm not favoring any company and why he or she is saying something. Okay, but these kind of statements doesn't going to help you. It's just making mockery of some other people, nothing else. Now, apart from that, I hope you have heard about this news that Tesla files for 3-for-1 stock split, and the Fed will raise rate in the week ahead. But what Chair Paul say matter most. So we have to see what's going to happen as far as the next meet is concerned. So a hike is already given, but the way they are going to project that hike and what are their thoughts going forward is going to make some big move. At similar times or on similar lines, European market closes after ECB meeting, inflation, US inflation shock. Okay, now because European market has also decided to raise interest rates, so everybody started hiking the rates. Now, if you are looking at, see, 2-year treasury rate surge to the highest level since 2008, hotter than expected inflation rate. Now, if you are looking at the 2008 inflation, somewhere here it was at or very near to 6%, and now if you can see the US current inflation rate, it is 8.6%, so it is way higher than 2008 data. So this comparison is way old than one can take a note of. Apart from that, you have this international or geopolitical tension going on, and let me tell you, if you started mocking companies, but if you just pull out of this geopolitical tension, you will see the overall economy or overall inflation across the world will soon started coming down. But you don't want to do that. You are just making things worse, and at the same time diverging people's mind to do something else. So this is what is happening actually, and there is nothing called making things right. Apart from it, I think this is most of it. I don't want to read any more bad news. So let's go and check it out what the market is saying. As far as the past Friday is concerned, it was very bad after the inflation number. I don't know whether people everybody knows that, but market dips like anything. It was just a market move, nothing else, because everybody knows that there will be a shocker or a big shocker, and if somebody is thinking that this is the end of the inflation, which is probably not, because one thing linked with another thing, and you are not in a world where everything works out. You must remember that even we are 2 year after the pandemic, but the pandemic still going on, and there are lots of restriction across the globe. If it is not happening in your society, it does not matter that it is not happening across the globe. So the globalization which was happening till 2019 is not happening in 2020. Anyways, the Dow Jones has fallen nearly 880 points, NASDAQ 414, S&P 116. So biggest loser was NASDAQ 3.5% and 2.73%. Dow Jones overall impact nearly 3% on S&P 500. Now understand this, stock market will factor in everything day after day. It's not going to wait for the inflation data to come at 15% and then we will see. It's not going to happen. Let's say if the inflation data comes at 15% after 3 or 4 months, I'm just giving an example, stock market will factor in the same in the next 30 days. That will definitely happen, because stock market is a different thing. It does not wait for interest rate hike, it does not wait for the next inflation data or other macroeconomic data. If it feels that this is going to get bad to worse, it's going to reflect in the stock market, and that's the beauty of it. It's a future discounting machine, and it's going to happen in the similar manner. Apart from that, what steady is oil being the best as far as calendar year 2022 is concerned. Now gold is also trying to take a support. It's been trading in between $1,800 and $1,900 for the last couple of weeks. Apart from that, the VIX started rising higher, and again the biggest mover is indeed US 10-year bonds, which was fallen to 2.7%, and now it is trading at 3.16%. Probably this is the first chart which we are going to look at as far as today's chart and data are concerned. And let's see, then you have natural gas. When I was one of them was talked about $6.5 and $7.5 when natural gas was trading near to $2.5 and $3, and it was like 1 year back when the chart was so positive that it is definitely indicating a big rise, and that has happened. Nearly 200 or 300% rise for natural gas is going to put entire or half of the western hemisphere in a deep problem, because it's going to pain them most. Apart from that, you can see the treasuries across maturities are rising, and the dollar index is going to move again, and it is closed at 104.19, so it is again going to hit the upper end of the range. And let's see if this time it will make towards a move above 105 or not. So things are getting bad and then bad to worse. So let's now start analyzing the chart. The first one, as I have said, the US 10-year bond yield. So if you are looking at the US 10-year bond yield, so this is the long-term chart we have here, and now after falling for the last couple of days, it is now moving back towards the previous high and most probably towards the breakout zone. As you can see over here, 3.33 is the level that we are looking at, and once the US 10-year bond yield moves above 3.33, then the next couple of targets we have here will be 3.8, 4.19, and you have 5.2. So better be prepared for these kind of things, because it's not because it's going to move and continuously sustaining higher. It is a tradable instrument, so it simply shows the short term risk is so high that the lenders of the money are going to ask more interest than before. That's what is happening right now. Apart from that, if you are looking and checking the dollar index, what you can see here right now, so let's just wait to open this chart. So if you are looking the dollar index, now it has officially made a breakout. Okay, what I was thinking is going to made its already made its final high, and so half of my prediction gone wrong, or forecast gone wrong, because what I was thinking is the high is probably made and now it will go here and there before making the big move on the downside. And I've already talked about calendar year 2023, and I was not expecting any sharp move on the downside in the calendar year 2022 right now. So it can happen, but a move above 104 and 100, so 103 and 103.8, so a move above that is definitely a cause of concern, because you are now officially, a breakout has happened. Last time it went up to 105, so a breakout has indeed happened. Let us see what is going to happen after 104, 105. If it is continues to sustain above 104, then the big target that we are looking at, here we are, is going to be or will be in between 190 and 120. So this is what we are looking at, and this is all happening because of bad policy, because of very bad policies, and you do not understand what to do. And let me tell you one thing, it's anyhow bad. A very high dollar is going to hurt all the developing economies, but you are not in 1980s or 1970s. A big dollar spike will hurt the US economy, and it's going to face the heat or wrath of US dollar rather, because they have to pay the rates or pay the yields which for the external debt that they have taken from other countries or from other markets. So you must be very worry about the kind of things you are expecting. So dollar index going beyond a certain point is not at all a good thing for any country and neither for the US. Now talking about the NASDAQ, I have already said this thing in my past videos that NASDAQ although started moving higher, making some moves, but it is not at all looking like a support has been made. And if you are looking at the current price chart of NASDAQ, what you can simply see here is things are not settled yet, so it will definitely take time before things will actually settles down and NASDAQ will again started moving higher. So that time is yet to be seen, and the big support that we are looking at as far as the price chart of NASDAQ is concerned is going to be like this, right? So this is what we are looking for. So as far as the chart of NASDAQ is concerned, we have our next to support, which will be 9,400 and 8,600. So this is the zone where you can say that probably the correction is over. Okay, so from the top, the index had itself gone down by 31%, and what I'm talking about is a correction of nearly 45 to 47% on the downside. So we have lots of things that are yet to be seen as far as NASDAQ is concerned. Now the Dow Jones is much more reluctant as there are companies which can work on high inflation environment or which can work better on high inflation environment. So as far as the price chart of Dow Jones is concerned, what we are looking for is a retest or a move towards its 200-day moving average, weekly moving average, and it is 29,000, nearly 29,300. Okay, so 29,300 is going to be the level that we are looking here. So it will be a right now it's going to move, but we have to see how things will settle down. But the support level that we are looking here for Dow Jones is going to be 29,300 on the downside. And if you are looking at the inflation chart, it does not matter what and how much and when will the inflation comes down and all those things, and what will be the highest peak. You need not to bother about that. If you continuously focusing on macro trends, they are important. You must know the ramifications and you must know what is happening as far as macro trends or economics are concerned, but you cannot correlate it directly with the stock market, because as I have told you in the first couple of minutes of the video, that the next inflation rate or the next data point will come after a month, and meanwhile we have 22, 20, 26 trading sessions where we're gonna see the stock market will do what it can do best. It will discount, and it will discount probably more than half of the correction in the next 30 days, or probably if things gone wild, then the entire correction will happen in next 30 days. So what I'm asking for is a very simple thing, is not out of the range. Let's go back to the chart of NASDAQ and let me tell you what I was saying, because the support which I am expecting here, okay, so the support that I am expecting here is nearly 2,800 points down. So NASDAQ making 2,800 point in a month is not at all a very big deal. It may happen in a week time as well. So what I'm asking or what I'm saying is not at all out of the box scenario. It may eventually happen, and things are looking quite on that path. So be very much skeptical about your next move, and most specifically if you are thinking about going long into this market. If you are a long term trader, you need to find out some of the best stocks and you need to start investing slowly and gradually. If you are a trader, then you have the shorts which are now open for you, and if you are a pro trader, there is nothing to be said from my side. But if you don't know how to trade, then you must do your analysis before making any kind of trade, most specifically on the long side. But even for the short side, you need to know what's actually going on and what are the methods or what are the risks that is involved, even if you are going short or along with the market. So this is the end of the video. Thanks for watching.